Yield is so easy in a bull market, but surviving yield in a bear market, that is not. I'm currently in 3 Pendle LP positions. I love Pendle along with Camino Finance and a few other protocols out there for earning some yield on my dry powder while I'm waiting for the bear market bottom. But a lot of times on a protocol like Pendle, the highest yield is not the safest. And on that note, check out our disclaimer. Now, in a bear market, yields will disappear almost overnight. Liquidity dries up, incentives become non existent, and the liquidity evaporates. Look, the exit then becomes the biggest cost. And if you don't understand the mechanics of yield on Pendle, you're not going to farm it correctly. You're going to underwrite other people's risk, and you don't want to do that. So today, I promise I will explain how Pendle actually works, how to evaluate LP positions on Pendle Finance, and I'm even going to walk you through 3 LPs I'm currently exposed to. Now, if you want something a little simpler, you could always go with PTs, or if you're the degen airdrop farmer, you may want to look into YTs. We're going to discuss all that today. Now, if you stay around, we'll discuss those 3 positions, but this entire video is about capital preservation first, yield second, but that doesn't mean we still can't earn on our positions. So next, I wanted to discuss Pendle's yield. Now, or Pendle as a yield bearing protocol. So most people don't understand this. Pendle splits a yield-bearing asset into 2 things, a PT token and a YT token. The PT token is your principal token, and the YT token is your yield-bearing token. So buy the PTs because they are kind of like buying a fixed yield CD at a bank in a sense. You're going to want to try to find those at a discount and you'll redeem at par at maturity. That is automatic profit. That also locks in fixed rate yield. If nothing breaks, you get all of that yield, and that is awesome. So understand that fixed yield doesn't necessarily mean fixed safety, because you're still going to carry the underlying risk of the protocol and where that yield is coming from. Now, the YT positions actually capture variable yield and points. So that is your airdrop farming. And if that yield rises, there could be extremely high upside. But the first thing to collapse when the yield compresses is the YT. So in a bear market, YTs will get repriced extremely fast. What's interesting is if you stay in a YT for the duration, it will mature to 0 because your money being spent on the position is providing the yield for those in the PT token. So YTs help you to catch those airdrop points, but the PTs, you're getting yield from the people who are point farming. Now, what I have gotten interested in earning extra yield is their LP options. So Pendle Finance also allows you to provide liquidity through an LP. So you're getting the underlying yield, the PT pricing, the AMM fees, which usually are paid out in Pendle token, incentives, and points. So you get a little bit of everything, but the LPs do introduce rate risk, exit risk, liquidity risk. So this is where yield can look really good on paper, but it can also get hardest to unwind and stress. So yield is layered risk, right? Now, before we take a look at any of these Pendle positions, and before I truly get involved in any position, I'm always going to ask myself, what is the real yield source? How deep is the liquidity of the position? How long is the duration? And finally, what could break this trade? I don't ask what's the highest APY, although we might look at that occasionally. And we did find a pretty good one over the last 48 hours that I'd like to share in just a minute. Now, The first position I wanted to take a look at today, if you stayed around, is my REUSDE LP. This is an Ethereum position. Now, this position is sitting at around a 14% yield on the LP. Of course, this can fluctuate a little bit, so we have to keep an eye on it. Liquidity is 4.7 million, which is not bad on Pendle Finance, and the maturity is about 115 days. So this position has more liquidity, a longer duration, but there is some risk with REUSD because you have to look into the actual protocol. So there is some underlying risk with the yield. So REUSDE is an RWA-like thing. There is counterparty risk exposure. So if people don't pay up, you could lose out. Redemption of REUSDE can cause a cadence risk. And then, of course, we are dependent upon the USDE ecosystem. So please understand, this position is kind of like credit line exposure dressed up as yield. So the LP yield is the underlying plus the PT plus the LP component. And the points on this position for me are secondary. Liquidity would be the first to vanish in stress. And we don't have a lot. So that's something you have to watch if the market takes a downturn. Now, redemptions on a position like this sometimes can be slow. So I treat this as a higher tail risk stable coin yield bucket. So I size that accordingly in my position. I'll show you my portfolio just a minute if you stay with us. Now, the next position I wanted to look at before I get into our high yield, the kind of the cherry on top that I found yesterday is USDi on Arbitrum. Now, USDi is another stablecoin protocol on Arbitrum, and USDi is actually a synthetic dollar protocol that's actually designed for the physical infrastructure of AI compute. It's kind of complicated and nerdy, but all you need to know is that it earns an LP APY right now of around 10 to 11%. The liquidity is $2.98 million and 227 days to maturity. So the only problem with this is the underlying yield. Underlying yield is actually really low on this token. What that means, the return is largely the incentives, the points, and the market structure around USDi. So the thing is, we don't know. Could this be an inconsistency in the UI and the point multipliers? I don't know, but it is something we need to take into consideration. So longer duration, program dependent yield, cap mechanics. This could be a little more risky in a bear market. So this one, if I was going to put more money into it, would be more speculative. Maybe I'm farming airdrop points of this protocol, but I wanted to give an example of an LP. You could do that yet. Now, if I was actually farming points on this one, I would probably go with the the YT token, but that is just me. But let's take a look at my favorite position that we located over the last little bit that we can earn some effective yield during this bear market. So this one is actually position I've been in the past. And if we go to my Pendle dashboard, that is YoUSD. Now, YoUSD is actually a vault that farms yield across all different protocols and using different vaults that are on Exponent. And if you take a look, the headline APY right now is 33%. Now, we're going to discuss why it's so high in just a minute. But what I want you to know is that YoUSD, they are a protocol that is farming other protocols. So their structure and their positioning can affect the risk of their own YoUSD vault. Now, the liquidity of this position is a little bit lower at 1.38 million, and it matures in 24 days. So most of that yield is coming off chain, almost 28% of the 33.46% yield. So it's the driver, but it could also be fragile. See, the short duration helps, right? So when durations get shorter, yields go up. Sometimes I try to go in there and snipe some yield for a short amount of time, but when you choose to do this, I like to keep the capital small because with thin liquidity, a heavy incentivized yield, a lot of people might be trying to exit when this gets close to maturity. So I will not stay into this for 24 days or however long is left, but I will probably stay in this one for approximately 2 weeks. So I'm treating this one as an opportunistic short-term sleeve. The size is small enough I can exit it in one transaction, and I can always monitor each of these and off-chain yield weekly. So obviously, if the yield drops, I'll probably exit out of this position. Although you do earn some YoUSD points, which may count towards an airdrop in the future. But this is the way I look at Pendle, and here is my real rankings. I know I'm not looking at this by APY. Short duration PTs are usually your least risky positions. Of course, long duration could be depending on the protocol. Short duration LPs tend to be less risky than a mid duration LP that has a lot more time it has to run through. And then long duration YTs that are heavy on airdrop points, those are going to mature at 0. So those are your riskiest, but also the ones that you could possibly earn the most on. So what are we looking at? For all 3 positions, I will be monitoring when liquidity drops, especially if it's greater than 25% over a week. APY drops while that liquidity is dropping. That's not good, and redemption delays when people are trying to exit position. That shows ecosystem stress. Now, obviously, we watch the news, and if more than 2 of these hit, I'm probably going to exit my position, not financial advice, of course. So, when farming yield on Pendle, you need to expand and reduce with your plan. Do not be reactive. Have predefined entries and exit. And also remember, everything in my videos and all of my content at DADSDEFISPACE is not financial advice. This is for educational purposes only, and manage your own risk. So let's take a quick look at this portfolio. Now, my core is my short duration PT and YoUSD, and we'll see how that goes over the next 2 weeks. Now, my satellite position is going to be our RUSDE, but I also I entered into this position when yield was down, got a really good rate on this one. That was awesome. And I have a speculative bucket that would be either USDi, or maybe I just hold on to my Pendle tokens and stake for some S Pendle and earn yield and incentives that way. So in this video, we learned that yield in the bear market is not about maximum APY, and that doesn't matter if we're farming Pendle positions, providing liquidity, yield farming on Aerodrome, it does not matter. But whatever you're using, this is all about surviving long enough to compound those gains. So if you're newer to DeFi mechanics or even crypto in general, my free crash course is in the description below. For deeper structure breakdowns, allocation, and trade updates, I have the email list, or you can check us out on Telegram. I use Krystal for vault access and farm with AI agents. You can follow along or join us. Links in the description. And of course, we're going to be watching this fix and variable yield breakdown over the next couple of weeks because that framework matters to us more so than the APY. So until next time, ladies and gentlemen, peace